Hello and welcome. You're watching Ask BQ on Bloomberg Queen. I'm Agam Vakil. If you got questions on equity, this show is perfect for you. Send your questions to us on Twitter, Facebook, YouTube, WhatsApp. You can, of course, call us on 022-454-04141 or mail us at askbq@bloombergqueen.com. Just remember that do add the Ask BQ hashtag at the end or at the beginning of that question. Now, before we dig in, individual queries, let's also take a very quick look at the markets at this point in time. We're seeing some advances as far as your Nifty and the Sensex goes for the fourth straight day, even though gains over the past 3 days have been very muted. But the positive perhaps is that Nifty is comfortably above the mark of 10,800 and the Sensex, of course, at around 36,000. So we're watching out for that. The Nifty banking index just a shade better, up by around 0.6%. Let's take a look at the broader markets because that's where you have a lot of traction coming through. Starting off with mid caps and the small caps, they're actually moving in tandem with the benchmark. So nothing really stands out here as such. But when it comes to your stocks, at least as far as the Nifty is concerned, we have UPL, which is moving from strength to strength, up another 2.5% today. And we have gains of 2% for Dr. Reddy's as well as TCS, aiding some of those heavyweights up as much as 1.5%. And, moving on to your other gainers too, in terms of stocks which are keeping the indices higher, we have two private sector banks as well, trending higher by around 1%. And of course, Sun Pharma there as well. On the losing end, however, we do have weakness in Adani Ports. What a severe decline. Well, while we do understand that there was a unit which Adani Ports has sold to, Adani Enterprises, we are still to ascertain as to what the meaning or repercussions this has. But for now, it's certainly really under pressure. And when it comes to Bharti Infratel and BPCL are among those stocks which are also losing out in trade. On that note, I'm going to get in our two experts for the day. We have Sharmila Joshi, an independent investment advisor, and Jignesh Mehta of kiranjadhav.com, who are here to answer all your queries. Thank you, both of you, for joining us. Thanks, Sharmila. I'm going to start with you. We have an unusual question on Archies. We have a question from Abhinash, and he wants a fundamental view here. Do you track Archies?
Obviously there was one point when you tracked the business and the stock, and it looked attractive. But I think what has really happened over a period of time is that this business has sort of gotten a little outdated in the sense that if you're talking of cards, I think cards themselves. So they did actually sort of restructure their model, and they got into other novelty items, etc. But I don't think, that business has sort of lost the sheen that it had.
Right.
So I would think that at this point in time, you need to buy within the consumption space a little more relevant themes.
Yeah.
So I would, if I didn't have Archies, I would just stay away from the story.
Right. Okay, fair enough. Well, it's not like the stock has done too much over the past few years either, but there you have it. As Sharmila suggests, if you don't have it, it should be advisable not to get in. But moving on to Hindustan Copper, question from Harshit. He says he's bought Hindustan Copper at 99. And, he wants to know what can be done with this. It's clearly halved right now. It's at around 45.5. I'm wondering if I'm going to take a technical view here first. And, Hindustan Copper in a bit of a pickle. Jignesh, may I come to you on this one? How would you trade Hindustan Copper at this point in time? And how would you help the viewer out?
Yes, I think currently the chart structure is not positive as it is already forming lower tops and lower bottoms from a long time. And if I see on the charts, I think the stock has been, the stock is going down from the level 60. From the level of 60, it has fallen really down, and then it is taking support at around 40, 44, 45 some levels. I think currently chart structure is not that positive. However, stock has already formed a bottom, and from the bottom it is taking a bounce. So I think this bounce can be prolonged to the level to 47.50. So I think this stock should be held for current levels. stock can go to 47, 48 levels. When it goes to 47, 48, we will have to review the chart once again. As chart is not very good and falling trend line comes at the level of 48, so we should be cautious at 47, 48 levels. So once it has to reach 48, and then we can review it.
Right. Well, on that note, let's move in and talk about AB Capital. We have a question from Sudarshan, who wants to know if he can average AB Capital at these levels. Now, the trouble with AB Capital is that, you know, much has been spoken about, well, the relatively perceived reasonable fundamentals of this particular company. But what is also true is that since it listed in 2017, from the mark of 250, it has continued to come off, and, well, at this point in time, it's currently trading at 88. Of course, this gentleman here has bought the stock at 130. Sharmila, making a little bit of a loss, but what's going on with this one? And would you recommend that the viewer to exit from current levels?
So I think, you know, this is a slightly tricky question because yes, I think, you know, when you say that it got listed at 250, the whole method in which this stock got listed was slightly different in the sense it didn't have an IPO. It was a sort of a reverse listing kind of a mechanism they followed, and the stock corrected from I think almost the day it listed.
Yeah.
So if you had really asked me this question a couple of months back, I would have said definitely this stock looks worth investing given the kind of businesses that it's in, as well as its the pedigree, you know, the management, etc., etc. But what we've really seen is in this aftermath of all these issues that have come out, you know, in terms of what has happened with housing finance companies and you know all those. So who these now? So now the question arises: who have all these companies lent to? And you know all the data that comes out that your mutual funds could actually be the people who have lent money to all these businesses.
Yeah.
So then you don't know the profile of the companies that they have lent to. So, you know, all these things are now up in the air, and I think, you know, that's what's really taking a toll on all these stocks, because at the end of the day, you don't know. So unless you're very sure, for instance, you know that Muthoot Finance is in gold loans. Right. So they can't have NPAs because at the end of the day, it is gold, which is lying with them. Yeah. So if you are really, really sure of a thing like that, then you can, you know, like go out and buy a stock. But otherwise, we've really seen all of them take a beating. So I think that's the negative for me, and I think that's the clarity you need before you actually buy the stock.
Okay, so
or even average. So I think you can keep what you have for now, but I wouldn't even average at this price.
All right, fair enough. So hold on to your position, but don't average at this point before you get more clarity on, well, the various accounts that, well, you know, this particular company has in terms of lending. But moving on to the next question, we have a question on TCS, the March series. And by that, I mean, it's probably a point of view of the next 3 to 4 days, considering expiries this Thursday. Is currently at 1954, and it is actually showing some strength to TCS. It's up 1.5%. Jignesh, your view on TCS, keeping in mind the Thursday expiry?
Yes, for the Thursday expiry, it looks pretty positive. Yes, from current levels, it is showing the sign of going on the upper levels. I think 1940 should be the stop loss. 1953, 1954 is the current levels. 10 to 15 rupees stop loss beneath the current levels, and stock can go to 1980 some levels in next 2 to 3 days.
Okay, there you have it. You can go ahead and initiate fresh longs. But on to the next one. Need a fundamental view on Rain Industries. This one is from GP Patel, again, also on WhatsApp. If it is a buy, at what valuations would you buy it at? That's a tough one to call, but, well, Rain Industries, as we all know, has been one other stock which has continued its slide downwards, even though it is gaining today. It's up 6%, but if you actually look at the way it's actually corrected through the course of 2018, there you have it. It's lost around 71% of its value. Sharmila, a lot of HNI is involved in here, which is why I reckon that a lot of retail guys must have also gotten into the stock, but ever since we've seen a significant decline, what would your advice be to the gentleman here?
I would say a complete avoid from my end, because you know, I really don't have that confidence, and in general in the business and the cycle that the business is in, etc. Yeah. So I would really just stay out of this one. Okay,
there you have it. Please do not venture in here. And well, we have another question on Vedanta. This one is also a futures and options question. I reckon this must be for All right, so there you have it. Okay, that's for the futures and options space. Again, futures. Let's pull up the Vedanta futures and take a look at where it's currently trading at 169. That's as far as the spot price is concerned. And its futures is also around about there. So we don't really have too much of a premium or a discount for that matter. Clearly unwinding because we are in expiry week. Again, Jignesh, coming back to you, how would you trade Vedanta keeping expiry in mind?
Well, keeping expiry in mind, Vedanta is already dealing with its resistance. And if I see the future chart, it is trading at around 169.35 some levels. 170 is a steep resistance for this counter. I don't think counter is ready to break this level very shortly. So I think currently Vedanta should be avoided to buy. And if at all, I think if a fresh view needs to be taken below 167, it becomes the sell. So currently avoid it. If it goes below 167, one can initiate a short view on the counter.
Okay. Ramanand Jawar wants to know what can be done with Tech Mahindra's buyback. Sharmila, have you tracked this, and what would you do with Tech Mahindra? Would you subscribe for the buyback?
Well, actually, I'd keep the stock.
Okay.
So this is a space that I'm positive on, and I think that, if there's one sector that's sort of going to hold its own in this environment, then to my mind it is IT.
Okay.
And both HCL Tech and Tech Mahindra have really posted very good numbers this quarter.
Yeah.
Order wins for most of the large cap IT are also good.
Yeah.
So I would say the environment for them is pretty encouraging. So I really don't see any reason to tender shares in the buyback.
Okay.
So I would really just keep the shares that I had.
All right, of course, for the uninitiated, the buyback price has been set at around 950 rupees per share, which is at a significant premium here. And well, if I also bring in the consensus on Tech Mahindra, we have about 82% of analysts tracked by Bloomberg who are positive on the stock. The return potential, of course, currently stands at around 5%. That, of course, is an average of all the target prices that analysts put out and in terms of recommendations for Tech Mahindra. But on the whole, as I suggested, 82% analysts on the Bloomberg consensus are very constructive on Tech Mahindra too. So that would be your view, Ramanuj. I hope that answers your question. And moving on to a question from Vivek Kanodia. He says he has Ashok Leyland at 100 rupees per share. Yes, and he also has Apollo Tyres, but he wants a five-year view here. Apollo Tyres, which he has bought at 218. If we can also pull up Apollo Tyres and see where it's trading, and there has been a little bit of strength off late in a lot of these tire companies too. It's at 211, so mostly around the same levels for Apollo Tyres, Sharmila, but Ashok Leyland clearly about 18-20 odd rupees below the level. How are you placed on both these?
Well, I think for the CV space, all of us know what is happening with numbers, etc., and what has caused the pain for the entire sector, not just Ashok Leyland.
Yeah.
So, from an environment where actually Ashok Leyland was sort of underperforming before the rest of the sector, because they had that top management change, etc., and I think the stock started underperforming from there, and then I think the woes of the entire sector have sort of caught up with that space.
Yeah.
But now I think this is a price where probably you should not see too much erosion from. And even I think the management, from what I heard, they sounded fairly confident in terms of numbers in the coming months, etc. So I think this is a stock that you can stay invested in if you're longer term. I think again for tires, the whole thing is that the demand is coming down because obviously demand for autos is coming down.
Absolutely.
But what saves also the tire companies is that they do supply to a lot of OEMs, etc.
Right.
So I think there it hasn't sort of fallen off too much, the demand. But also I think for tire companies, raw material prices in terms of where rubber trades at, that plays a very crucial role, because for this sector the win-win is when you have good demand and rubber prices are low. So if both coincide, that's the sweet spot to be in a tire spot in. And if you're talking of a 5-year view, I'm sure you'll hit that sweet spot, sometime within that 5-year period, and that's when you should probably look to exit. So I think, yes, you can stay put in both if you have that kind of a view. Okay,
so Vivek, here's your answer. And if you said that you want to invest 50,000 rupees in each with a 5-year perspective, well, Sharmila has already given you that answer. But moving on to a short-term view on JK Paper, we have a question from Karan Singh. Let's bring up JK Paper and address it with Jignesh. JK Paper currently at 132, and as we all know, JK Paper has seen some strength over, well, I would say the previous few months, even though there has been, the last 1 month or so has been a little volatile for paper stocks. Jignesh, how would you trade JK Paper? What's your short-term view here?
My short-term view for the JK paper is negative, just because although the counter has given a great up move in the August, and stock went from 100 levels to 190, but then in the recent months all the positivity has been negated in the counter. Counter went below 150, suggests that it has broken its important support line. So from the current levels, I would not suggest to buy JK paper, and if viewer has it, he should consider exit from these levels.
Okay, well, moving on to the next question. We have one from Kaushal Patil. He wants to know, well, he hasn't mentioned if it's a fundamental or technical view, but a view on HUDCO and Network 18. Let's pull up HUDCO. Let's see where that one is currently trading at 42.5, and Network 18. An observation that I personally made is that usually before the elections, we tend to see, well, broadcasters gain in traction, but well, what has happened this time around is to the contrary. So the likes of Network 18, TV Today Network, as well as something like a ZTV, of course for its own reasons, and Sun TV too, all of them have actually come off quite substantially over the past 1 month or so. Do we really see an up move eventually in the next couple of months? Well, that's something that we'll know eventually. But Sharmila, let's talk about the long-term prospects of Network 18, and of course in the other case HUDCO as well. How have you placed here?
Yeah, so I think HUDCO definitely, I mean, the valuations look okay. But, there's a lot changing on the ground for these housing companies as well.
Yeah.
So I would think that just we've had a weekend meeting over the weekend, the GST meeting. But, that's sort of given mixed reviews again because of that whole the input tax issue, etc. So for builders, so I think it's best to just wait for a couple of quarters before you really look at this space. So if you don't have the stock, don't buy it. I'd be a little bit more positive on Network 18 because I think the stock has corrected again. They used to trade closer to 50. It's now at 33.
Right. Yes.
So in that sense, it has corrected. And as you said, pre-election could be an exciting time because obviously they get more advertisements, etc.
Yeah.
So probably that's a stock that you can look at. But I think within that space, actually, I've always really preferred Z as a stock.
Okay.
But because of the concerns Z has had of late, you need to see them figure their way out of that as well.
Right.
So at this point in time, I'd really be neutral on this space.
Okay, neutral on well, the broadcasting space in general. And on that note, we're going to take a view on ITC. Well, we need a 3-month view here. Dipesh wants to know what can be done with ITC, and ITC has been moving around 270, 275, thereabout. It's largely just consolidating at this time. But Jignesh, what would you do, keeping 3 months in perspective? How would you trade ITC?
I think ITC is a clear-cut bullish call. I think currently the chart structure is not only positive, the stock is staying above its support lines. Recently, stock has corrected, but whenever the correction happened, stock has taken supports from its support line. I think currently it is forming a triangle pattern as well, although we haven't seen the breakout yet. But falling trend lines suggest that the falling trend line is very near to the current level, around 290 some level. So whenever we have a 290 breakout, we can clearly set the target of 330 for this counter for next 3 months. I think currently, if viewer has it, he can hold it with a stop loss of 260 levels, and if he doesn't have, he can buy it after the breakout. Breakout could be seen after stock breaches above 290 levels.
Okay, well, Jignesh, we have one more question for you. The question is from Rajesh, and he wants to know, he's bought Nilkamal at about 1650, and he actually wants to know if it is a right time to average. Of course, it's for the long term, but in the near term, do you see any substantial movements or perhaps levels at which you could buy into Nilkamal?
Well, I don't think Nilkamal is an attractive counter at current levels because the stock has not only breached its long-term support line. Long-term support line is the support line for this counter from last around 3 to 5 years. If you see from the level of 1100 stock. Made the higher levels at around 2200. Then it was constantly trading above the support line, but since it has broken 1700 levels, the stock is trading below its current below its support line, and I think it is not currently a good time to go into the stock, even if at this lower levels counter is not showing any good volumes. So I think staying away is something I would suggest, or even if there is a loss, viewers should take a bold call and get out of this counter.
Okay, well, let's move on and talk about Motherson Sumi then. And well, today's day of trade may have come as a positive surprise for Motherson Sumi. For now, all we know is that there were a bunch of block deals that happened this morning. And we will eventually know who the buyers and sellers are, of course, but it's currently trading at 158. And over the last couple of sessions, in fact, even its previous day, trading day, was one in which Motherson Sumi was trading very strong. So it's on the last 7 days, it's gained as much as nearly 17%. The real question is what's going on, how are the fundamentals, and is the strength here to stay? So Shamila, let me take this up with you. I'll also do a technical check, but fundamentally, it's not like things have changed substantially for Motherson Sumi in just a span of 2 or 3 months.
But also the stock had corrected a lot.
Okay.
So if you look at the way the stock used to trade maybe 2 or 3 years ago, and then they've been hit by one issue or the other.
Yeah.
But overall, given the kind of strong clients that they have, the OEMs that they have with them, etc., and their whole model of really acquiring companies overseas and integrating them. Is definitely a strategy that I've liked, and I like the management also sounds very clear in terms of where they see their vision in terms of revenue, etc. They've had a lot of issues, but along the way, and I think now the one that is sort of looming over them is obviously Brexit, and how that affects their space. But that said, I think because the stock had corrected so much, probably some people saw value in it, and you saw the deals. So I wouldn't get carried away by the stock, but definitely it's a stock that I continue to like. But you need to now see them getting out of this. Hopefully, this next year or year and a half will sort of give you answers to what some of the issues that they're in currently.
Sure, absolutely. But what we've also noticed is that Motherson Sumi, with the 2 straight days of gains, has also moved above its crucial 50 and 100 daily moving averages. So with that, Jignesh, if you could also tell us whether or not technically things have now changed substantially for Motherson Sumi.
I don't see very substantial change on this counter, but one thing is very sure for this counter, that this counter was ready to take distance away from the 200-day simple moving average, and that distance used to be around 100 rupees from 200-day moving average. And currently stock has completed that distance over lower side, so we consider it as a momentum count completed for the counter. So we were expecting a bounce, and the bounce has already come. I think this is one upspurt which is suggesting that counter is already forming a bottom. From current levels, I think enough levels are enough bounce is already taken, and counter should find resistance at 160, 165 some levels. But currently one cannot take an entry for the short term, but for the long term, definitely this counter is getting positive. 158 is even not a bad price to take a positional view on this counter. The stop loss for this counter should be the earlier lows, which is at around 130 some levels. If you want to hold this counter for 1 year, 2 years, this is the time that Motherson Sumi can be bought.
Okay, well, moving on to our rapid fire segment then. And before we begin, I'm going to request our experts to keep their answers as short as possible so as to accommodate as many queries as possible. And okay, we have a question from Voice of the Lamb, and he wants suggestions on what renewables energy and artificial intelligence shares for the next 10 years. Okay, Sharmila, I'm going to throw this open to you. 2 sectors here. Anything that stands out for you in renewable energy And artificial intelligence, almost all the big IT companies are in that positioning. It's just a part of the business, but still, in that case, anything that stands out for you in IT?
IT, I think you can go with Zensar or Persistent.
Okay, all right.
Okay, so if you renewable stuff question, I really wouldn't do anything as of now.
Okay, well, there you have it. That's an avoid on renewables, at least at this point in time. A technical view on JSPL, bought at 161. This question is from Krish. It's currently at 158, just about 3 points below his entry price. 6-month view. Jignesh, this one is for you, JSPL.
For 6-month view, counter is going to turn negative. So if he has bought at current levels and if it is loss of only 3 rupees, he should consider exit.
Okay, well, a question from Gaurav on Canara Bank. Jignesh, I'm going to take this one up with you again. Let's pull up Canara Bank. It's currently at 223, up only 0.5%. What would you do with this one, Jignesh?
I think avoid is my suggestion for this counter. This counter, although is taking a bounce, but bounce cannot be sustained because counter has resistance at every upper level.
All right, and a fundamental view on HDFC Life. Well, Ritvik Sharma has bought them at 388. Are these compelling levels to move into the stock, Sharmila?
Well, I don't know about compelling levels, but you know, if you're invested in life insurance, then I think you have to realize that it's going to be sort of a sustained growth kind of a stock.
Yes,
you know, it's not going to be 1 year of whatever. You know, it's not going to be that kind of a play.
Yeah.
It's going to be steady returns. So if you have that kind of a view, you should stay invested.
All right, there you have it. That's your view on HDFC Life Insurance, and we've run out of time on this show. So I'm going to thank both our experts, Sharmila and Jignesh, for helping our viewers with all their queries. That is all that we have on this edition of Ask BQ. Up next is Power Lunch.